Hey, what's up? Welcome to DGen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts. Happy Friday, January 17th. I am going to be going over a list here in the intro, and then I'll be diving into the charts, going into some of the data. And so first, I will be going over the volatility index, or the one that I like to trade, which is the UVIX, which is the 2x long volatility or VIX futures ETF as seen here. So I will be going over that as well as touching on the VIX. Then I'll be getting into the SPX, which is the S&P 500. This is the one that I like to do my charting on just because, I feel like, the numbers are there, whereas the SPY, from what I understand, seems to be like a derivative of that, just having a lower, more accessible price, but it does have pre-market and after hours trading, so always good to be looking at that. Then of course I will be diving into Bitcoin, which is now, it looks like, approaching $103,000 a coin, so getting up there. Looks like it may be breaking. It looks like it has broken out. We'll see if it does retest and continue. And then there is some data that I wanted to get into that actually has me really excited about a few stocks. One of those being Intel. I think that, it has formed this bottom here, a double bottom, and the options data just looks really good. So I'm excited to be diving into that. And then also other stocks that did look good include Celsius, ticker symbol CELH, as well as Rivian Automotive. So I'll get into those. I also did want to touch on AMC, which did get some news yesterday. I think it's important to go over, but I will be doing an AMC DD video later today. We'll briefly go over the chart in that, but did want to touch on the news here. And then also one that has been very intriguing has been Wolfspeed, ticker symbol WOLF. So I wanted to get into that. But first, let's get started with the UVIX. I had talked about yesterday $30 being, an approximate bottom for this. Prior to the reverse split, that was $3 a share, and that was previously a great dip buying opportunity, as you can see here in this red box. When it was coming down, came down to $3, and then from there it did rally, let's see, about 80%, so very nice in that green box. Then just had a few days down, another rally to the top of this green box here that represents about 44% move to the upside. And so now, I haven't drawn it just yet, but I do think we have gotten into, this another red pullback zone. So maybe I'll draw that up here this morning. But I do think that we could be breaking below the approximate $30 level. Part of the reason why they did do a reverse split is because, they expect the stock price or the ETF price to be going down. I believe that's because of contango, and the result of that is the price gradually going lower over time. And so with that being said, I have mapped out some levels that I think it could be going towards the downside, just like how we broke below this yellow uptrend over here. I think that we will be breaking below the $30 level. So me personally, I'm not being too aggressive with this, but I do think that it is one that is good to passively accumulate for hedging for whenever the stock market does pull back dramatically, volatility goes up, and the UVIX goes up. And so, it's a good way to kind of have some cash on the side to roll into other positions when they are down, when this one is up. And so one of the levels that I have marked here is $28.68. That's from this little Fibonacci extension that I have drawn here, but that was based on the pre-market pricing. So let's switch over to that because it may have been adjusted. So let's just see what the highs and lows are. And so, let's just consider that. So from this high, maybe I maybe I want to adjust this a little bit, getting to the low here and then up to the high. I think that might be, yeah, we'll just see. We'll see. So 20, I'm actually just going to note, I can undo it, but yeah, I'm going to note 2868 because maybe that is a level that I want to come back to. Yeah, so I'm just going to adjust this low point to 2938 and this one over to the pre-market high here. So 2938 and 30. Oh, let's see. Just got to get that lined up just right. 2938, that looks good, and 3070. So that is good as well. I'm going to lock that into place. Take a little bit of a step back. Actually look at this on the daily so we can see where that level is. And so that is 27.78. So really, right around 28 bucks plus or minus 30 or 70 cents. Seems like, it could be at least going to that level. But if we do take a step back, I do have this purple line drawn here at around 25, really just being approximate. But yeah, I think that 28, maybe that's the new 30. And so I'm just going to note that for myself. But yeah, taking a step back, I do have this parallel channel that, other than this blip up on August 5th, we have been trading in this channel going back to the beginning of May. And, we've, tested the bottom of it, multiple times over here and here, as well as over here. And we have tested the top of it multiple times. And so with that being said, that is why I think that price could be coming down to $25. So, good to pace oneself. So looking good. And I do see Yuri K saying, hey, dude, thanks for all your great work. No problem. Thanks for joining. I just think that doing streams like this well before the market opens, it's not only, I think, going to be good content if I can do this every day that I'm not working. Ideally, this will become my job, or really trading will become my job, and I'll do this for fun. And yeah, and also it's creates good habits for me. Looking at the charts like this, I'd probably be in bed right now otherwise. So actually, I would be at work today, but I called in sick because yesterday was my birthday. So I'm taking advantage. I don't have kids, so I never get to take advantage of sick days. But anyways, looking here at the UVIX right around, just below 30 in the pre-market. Let's look over at the VIX. This is not going to have pre-market pricing. But, I do have something similar with, this downtrend here that we could possibly be retesting around that level. And I believe I need to perhaps take a step back on the weekly time frame. And so we do have, all of this resistance going back to the highs from the end of January 2022. That was notable resistance. We did break above it, and now, that could be notable support. So I think that the VIX could be cooling off. Believe it or not, one might think there might be a lot of volatility with the changing of presidents in the U.S., going from Biden to Trump. There might be some volatility around that, some uncertainty. But actually, I think that there's reason for there to be not much volatility around that. And that would be that Trump's already been in office. He's done a lot of work to prepare for the, revisiting the role. And so with that, he's actually, I feel like done a lot of the work that would be done, in the first couple weeks, or that would be uncertain at this time. I think that a lot of that stuff is settled. So I think that, he's going to hit the ground running. And I think a lot of that stuff is priced in. So I think that it could actually be a nothing burger type of event. So with that being said, I think volatility could be coming down more. Price could be going higher across the market, the S&P 500, whatnot. And so with the volatility index, one level that I do have marked here is 1446. Let's see what that originates from. I'm not sure that's really that significant of a level. And I am getting some wonky stuff with the chart here, but that level is the low from over here. And I might actually just switch over to Chrome for a second to see if, yeah, this is, I don't know why it's so wonky. I think it will go back to normal. But yeah, so 1456, perhaps a little bit arbitrary. What's probably, another level that might be good to consider, because that was effectively just a low following the pullback. We have gotten lower than that. Another level that we might want to be paying attention to is $12.70. And that was actually not the 52-week low, though. The 52-week low is $10.62. So that is one we might want to be paying attention to. And so let's see here, take a step back. 1062, maybe that is one that, is going to be good to be paying attention to as well. I'll color that orange. And so, yeah, both of those could be retested later this year. I suspect that 1270 is probably a more feasible target in the near term than 1072. Perhaps by mid-year, we're down to 1072, finding some support there. But then we could get, another big spike in volatility, as the last time we were that low, we did go up. Let's see. Over 500% in the span of 13 days, or within 2 weeks, 9 trading days. So pretty big move up there. Don't know that's going to happen again, but I do think that this looks, like it's kind of in a cool off period, and that's really why, I like to track the UVIX, can get shares here, whereas with the VIX, everything, with this has, a ticking time clock, and I don't really like that about it. But anyways, let's move on to the next ticker on the list, which is going to be Bitcoin. And I'm actually going to go over this in TradingView because I just feel like the data there is a little bit better. But since I have drawn these lines here, and this is kind of, a shorter term perspective, I would say, on Bitcoin. So, I had drawn this yellow downtrend yesterday. It does look like with yesterday's close, which I do believe the closing times for these candles are a little bit off of UTC, so they're not going to be the exact same what we would be seeing on TradingView, so I will go over there in just a second. But we did get a close that looks like above this downtrend, and we are now trading above it, above the important level of 102. Which I will just add a horizontal line here so we can see that level 102, about 800 was the high over here. But again, that level is probably just approximate, because I don't think the highs, the lows, the closes of the candles are exactly what we would be seeing in TradingView. So do take that with a grain of salt. But we are at that level. I think it's going to be really important to see, are we able to close above 103? If we are, I think that we could be revisiting the all-time highs of 108, 400. So very exciting to see that. But if we can't see that, if we do get rejected here, we might be seeing some nice dip buying opportunities around $100,000 a coin, maybe a little bit lower here. It looks like where the cursor is, that's around 98, 99,000. Would be excellent if that became new support, this downtrend became new support, and we did start to go higher. And that would also give us, another sub 100K dollar dip buying opportunity before we start to make new all-time highs again. So, regardless of what happens around 103, I'm really excited about Bitcoin. But let's take a look over at the chart in TradingView. And so this, I just have this fun little level with the trophy there at $100,000 a coin. We are above that now. And let's see, yeah, because, you notice it looks like the high over here was hit on January 7th, whereas over here, it looks like it was on the 6th. And so with that being said, this is a little bit wonky, but the high there, 102, about 800. And so let's just see what the high was over here on the 7th. That was $102,735.99. So a little bit lower, but either way, a good level for us to be marking. And so let's just get the horizontal ray tool so I can mark that there. and that should be at, let's see, the high from that day was 102.73599. So I'm just going to adjust that here, 735.99. That's the all-time high. And let's just see what color do I want to make it? Let's make it blue. Just let's make it orange for Bitcoin, actually. So there we go. And I'll lock that into place. So that is a level that we want to be getting above. And one thing you might notice, why is there this, orange dashed line here? It looks a little bit funny because it does look like we have broken out from that level. That is just from a Fibonacci extension, which, we got baseline here, and then we can take a step back to see where that goes to the upside. It does look like it is a bit approximate, although I did lock it. Oh, actually, no, I didn't lock it into place. And so I'm just going to move the high here a little bit closer to that all-time high. And then I'm going to drag this low over just to match up with that all-time, or not all-time low, that big wick low that we saw on the 13th. And then we can see the low over here from, let's see, August 5th when the markets gapped down. That was an excellent dip buying opportunity across the board. And so really, from that Fibonacci extension, we can see where a measure move would be, effectively taking, the distance from here up to here and then translating that from the low over here to going higher. So let's take a look at that. And so we can see some levels to the upside. And so the measured move effectively from here to here, going from here to the upside, a 100% extension, or that same distance there, that would be bringing price to around $196,850, right around $200,000 a coin, where the spaceship is. So looking pretty good, but it is quite possible we don't get all the way up there. There are these other levels that we could be hitting as resistance. And one of those, I believe I had mentioned this in a more recent video that I did on Bitcoin. One of those levels is the 786. That's around 167, or let's say 169,420. Have fun with it. That would actually be, a pretty awesome top in my view, just because, we're all idiots here. And that also does correspond with this other 786 that is from, the prior let's see, cycle, low to high, and then pullback. And so that does, make a lot of sense to me that we could be, getting to that level, or at least I think it's good to not be getting ahead of ourselves with the expectation of it getting to 200,000. But of course, it could be going higher because we can see that the 100% extension from this extension, that is 233. But again, let's not get ahead of ourselves. But one thing that we might want to do, I do have this in the logarithmic scale. If I do put this on the linear scale, maybe this will give us some other insights, looking at the same levels but just on a different scale. And we would see the 100% extension from this orange extension going up to around 148,000 or 150. That would correspond with the kite here. So that is one that we might want to be thinking about. I think Bitcoin's going to be going higher, and I think that it could be getting to around 150,000. But I am going to switch this back to the log scale just because I think that there's a little bit more value with that comparing previous cycles, because it is really, growing exponentially. But yeah, so I'm excited about it. And then just, looking at this more immediate price action, let's see if we can get it close above 103 today. That would be excellent. But now coming back to Webull over here, I have to say, I am really excited to be talking about the next ticker. I just think that it's like mind-blowing to look at it. And I have to say, I do have some calls on this one. I don't believe I have any shares, but I was just looking at some of the data and just recognizing, oh my gosh, Intel looks amazing. And if we do look at the pre-market, it is above $20 a share. And so it did close at 1967 yesterday, but now looking at the 10-minute time frame, we do see this nice little bump up, hitting a high of $20.99. So looking really good there. But yeah, I just wanted to look at, I was looking at this last night. This 786 here, I don't know if you can see it. It's this Fibonacci level. It's not an extension, it's a retracement. But I was just trying to figure out, where did I draw that? I think I drew that back in time. So let's actually switch over to the weekly time frame. Take a step back. And then let's see, over here we can see where it goes to and from. It actually goes from the low that was hit on the 11th of September in 2009, and then it goes up to the high that I believe was hit in 2001. Let's see, yeah, on April 16th, 2001, that 786 is at 1886. And where are we at right now? If I do look over at the daily time frame, we have actually gotten multiple tests of that level, going back to it in September of 2024. Then we got another test of it at the end of December, just before Christmas. And then just recently, over the past week, on the 13th, on Monday, we did go below 1886, hitting a low of 1873. And we are bouncing. So that's a pretty historical level. We actually did test it again here in August. And so I think that it could be going a lot higher. And the thing that stood out to me, I actually have a post. Let's see. I do have a post. So I do have a question from Yuri. You deleted my message about requested tickers. I did not delete a message about requested tickers, but I'm not doing really requests during these morning live streams just because I want to go over the data before the market opens. If there is some time at the end, I can. But yeah, I didn't delete any messages. But yeah, if you put them in the chat, I can try to look at them. But I did want to look at here this post that I put on X last night, just saying that, this looks bullish to me, but I may not be understanding it correctly. And this just goes to, my learning of how to use the data in unusual whales, which I do go over every Saturday, and I will be definitely covering Intel, so make sure you check that out. And so yesterday, on January 16th, Intel net put premium came down by nearly $16 million, while net call premium went up, but only by 1.4 million. And so, however, volume was positive. So, that's just making me think if net put premium is going down by a lot, net call premium is going up. That makes me think that this is bullish, and that this makes me think that, a small number of expensive puts were sold, and I believe that would be to open, or would that, be the same as cash secured puts? These are things that I'm not really sure of, but, because in the chart that I'll show in just a second, we do see volume increasing, so that kind of got me, a little curious, but so that would be basically if they're if you have a cash secured put, you're selling a put thinking that price will go higher, meaning that the premium of that put will go lower. And then so you won't have to then buy those shares if price does come down, because price would be going up. But then because of that, because selling that cash secured put, market makers would then have to hedge and then buy those shares to be able to sell to whoever sold that. So that's kind of my understanding of that, but that may not be correct. While continuing on here, while a large number of cheaper calls were bought, which would then result in an increase in volume because you'd have a lot of cheaper calls being bought, whereas a smaller number of more expensive puts would be sold. And so I do see that data in January 7th, 15th, and 16th, but I'll look at the data here in just a second. And then so over the past 7 days, which we see here, it looks like, and actually maybe if, so I'm not going to click on those so I can, I still want to be able to read here. And so over the past 7 days, it looks like tens of millions in net put premium have been sold, while net call premium has increased by millions. So you can see the eyes there. It's gotten my attention. The only contracts over the past from yesterday with over $1 million traded in premium were puts, which I imagine will show notable drops in open interest prior to open tomorrow. So that is what I want to look at. And so the Bronx Viking, just a really great person to follow. He's responded to one of my comments before asking, so I thought I'd tag him to see if he'd respond, but he may not get around to it. Busy guy, so no problem there, no expectations there. But so just looking at the data here, what we can see is price in yellow over the past 7 trading days, going back to January 7th, has come down, then it's gone up, but it did not reclaim the dips here. But in the pre-market, as I was just showing, price does look like it's higher, so this is looking pretty good. And then what we can see in the red and the green, the red's going to correspond with net put premium, the green is going to correspond with net call premium. And so what we see is, on the 7th, pretty big drawdown in net put premium, which corresponds with, let's say, around $3 or $4 million being drawn down, whereas in net call premium, we see an increase. So that means what I understand to be selling of puts, buying of calls. That's bullish. And we see this increase in volume down here. Then the following 4 trading days, looks like we saw a good amount of red, but then we did start to see some green here on the 14th. But with that, we do see price or the premium hovering around, 0 here. So nothing too substantial with the calls or puts. Did see some puts being bought up here, but then, coming down to, let's say right around 6 or 7 million net put premium coming down. And then also, this is, maybe going to be around 3 million, this around 4 million. So puts are being sold as calls are being bought up here. And then, as I had mentioned in the tweet, that net put premium from yesterday came down by nearly 16 million. So that strikes me as being pretty bullish. This is just, this stands out to me as being unusual. And so that's, an exciting thing to be seeing. And also, something that these streams kind of reinforce my good activity. Let's see, following up on this. And then this is just, sorted by premium here. The highest premiums for Intel, you can't really see it because of the X there. But yeah, all Intel contracts. All of these are puts. These were the only ones that had premiums above $1 million. And so I want to see if these were all being sold. And so, I do see King Gerald's comment on TLT. So I think that's actually a really good one for me to be looking at. I'm just going to continue on with Intel, and then I will, let's see, add TLT to here. So I will go over that before 9 o'clock. And that is one that is a good way to be, playing long right now. That's a short 20-year bonds, I believe. But yeah, so here just looking at the data, I actually don't want to be looking at just a screenshot. I want to be looking at the contract lookups here. And so what we can see, this is, if I switch this over to 7 days, this is going to be the same data that I was just looking at. And so I'm not specifically, I don't necessarily want to be looking at a specific contract, although this is one that has sparked my interest. Intel, a $50 call that expires in January, so a year from now. The one that I have been accumulating is this one, the $30 call that expires in June, but perhaps the move to the upside, getting up to $30 a share, going up by about $10 from here. Maybe that doesn't happen by then. Maybe I'm wrong. And so I was thinking, well, maybe $50 is a good one to be considering. But anyways, I don't want to be looking at these specific contracts. I just want to be looking at the options volume, generally looking at that. And actually, this is going to be for, all of the, or not all of the, this is going to be specific to the one contract down here. So I'm actually just going to type in Intel up here so we can see the data here. And if I do sort by premium, dang it, all of it's 0 because the trading day hasn't started. But that's not a problem. What we can do is sort by changes in open interest, and what we can see is that, let's see, the ones, it's actually kind of a mixed bag here. I was expecting there to be more puts, but what we do see here is, increase in open interest. And so if I do come back to this, so this is a $35. So actually, let's consider these all expire today. So there's, of course, going to be a lot of volume traded on them. And also these are all in the money. So, people might be taking profits or, because, they are in the money. And so let's consider this one. This one goes out into the future. This is the January 16th of 2026. That's the $28 put. And so let's look at that over here. So let's see, a $28 put. Let's see. Oh, and actually, yeah, because I don't want to be seeing these being bought, so I actually want to do this in the reverse order. Yes, this is good. This is good. This is what I wanted to be seeing. I wanted to be seeing a lot of puts being sold, although, these all expire today. So take that with a grain of salt. This one expires in March, $30 put. The one that I wanted to look at was a $28 put, so I'm just going to be scrolling down to see that. If that is even on here, I would imagine it is. I guess it's not. So, what I am going to do is just filter this by, let's see, the expiration. And that is going to be a put and the $28 strike. So let's add that to over here. And so this one, we can see that the open interest actually increased. So that is not what I was expecting. I was expecting that to be going down. Let's see, an increase in 5,000 contracts being traded at around $9, which translates to $900. We can do some math on that. I'm just going to pull up my calculator here. And so we can see that, $5,250 and then multiply, or 50 contracts, that number being the increase, we can then multiply that by the average price, actually, which is the same as the low and the high that was traded yesterday on the 16th. So that's going to be $9.10. But because that is multiplied by 100 shares per contract, we can multiply this by $910. And so the total amount of premium traded yesterday that went into, boosting this up. I wish there were commas here, but that's, $4.8 almost million going into these puts. So that actually doesn't look so good. That's not what I was expecting. And so that's a little discouraging, I would say. But we can also look at the other contract that I did have up here that does not expire today. And that is going to be this one, a $45 put. And so let's see if I can find that one. And so let's see, sort this by open interest. And I want to be seeing that going down. $45 put that expires in, let's see, June. Don't see it there. And so I'm just going to make sure it's 45 June. Okay, let's look. And so coming back to here, Intel, let's take, yeah, I've already got that here. June expiration, so take a look there. Put, and I want the $45 strike. So let's scroll down to click that, and then I will add that. And so we can see, and actually maybe for these, because I am looking at contract specific, we can see that these two big spikes here towards the end of the day and that one, and then let's also look at the other one. Again, same type of thing. Just a big order, which had, $5 million on it. And then for the $45 put here that expires in June, here we got 1.3 million, and then here 1.8 million. And then so from this contract, if I do scroll down, we can see that there was actually no change in the open interest. So very interesting. And so that suggests that this person, really just swung the contract. And so if they were to, these are expensive contracts. That's all I have to say. But it's because they're so in the money. The low was 21s. That's $2,521 per contract. The high was, let's see, $9 more than that. And so that's kind of interesting. I'm kind of curious about that. That is unusual. But yeah, anyways, I am excited about this contract here. $30 call expiring in June. I think that we could be seeing that. Pre-market, it does look like it is still above $20. You can see that there at $20.66. And then the $50 call, this is one that, kind of sparked my interest just because, maybe I'm wrong with the June expiration. And if we do look over at the chart, why might $50 be a level of interest. So $30 here. I've got the gap right around 28.87, so 30 makes sense there. But then over here, let's see what's the pivot high. That's around 36. But we do have a good amount of consolidation here, getting into around $50. And actually, this high here was at $50.60. So that is the reason why I picked that strike for a year from now. That one just looks to be pretty appealing. And that's actually the high, a 52-week high. No, it's not the 52-week high. That's, the past couple years high. That was the high from December 27th of 2023. So yeah, that one just looks really good to me. And so, yeah, I'm not going to be able to, sorry, Yuri, Kate, I'm not going to be able to go over all of those requests because I do take a request live on Sunday, so happy to go over requests there. This is just to go over kind of general stuff that does stand out to me. But let's continue on. I did want to go over Celsius. This one, let's see. I think a lot of people, I have these lines drawn over here. A lot of people were talking about this potentially being, a falling wedge, and that didn't end up playing out. But we have gotten this consolidation over here. We have been putting in higher lows, although it is kind of ugly with all these lines that I got drawn up here. But I do think, with these higher lows here from this white trend line that's kind of thin, maybe I want to make that a little bit thicker. We have been putting in higher lows, so I think that looks really good. And, we do have, kind of this downtrend here, could be breaking out from that. But similar to, what I was seeing with Intel is I was noticing some data with Celsius that, just kind of sparked my interest. And so this is, so just behind me here, we can see, the big drawdown in net put premium that's coming down to $1.5 million. And then we do see that for this contract, it's down by 2 contracts. This is one that I have I don't think I've necessarily been accumulating. I think I have 1 contract. I've actually been trimming a little bit, taking some profits. But yeah, curious about this other one that expires in, January of next year, $100 strike. And so why would I pick $100? And the other one was 50. So why would I pick those levels? So 50 really just kind of being this, all these are white lines. So maybe I should adjust the color of this one maybe to yellow. And so we just see this consolidation over here that might be acting as resistance. And then this, kind of double top up here that does strike me as another level we could be getting to. So maybe a year from now, or at least, heading towards that level. So those are some that stand out to me for Celsius. But then if we look at just like the general data for Celsius, let's look over here. And so we can see that, again, premium here listed by a 0 because the trading day has not yet started. But if I do change to open interest, the number that have been increasing by the most number of contracts have been calls. 2 of these expire today. And so actually the pre-market price is 28. These, got some kind of wonky strikes, but they are out of the money. And so maybe we'll be seeing a rally today and they'll be getting in the money. And then this one is, it expires, by the end of the month. So I think 2 weeks from now, $29 strike that was accumulated. And so, yeah, these are being bought. So that's bullish. But we do have a put here being bought as well. So these are all, more than 1,000 contracts. But really, net does look to be more bullish. But then if we do switch the open interest to the other side, we can see that the, top 1, 2, 3, 4, 5, 6, 7 contracts here that had the biggest decreases in contracts were all puts. These all expire today, though, so that's another thing. And actually, all of these here, even the calls, which some of them are in the money, this one is not being sold. This one still has a lot of open interest, so I think some people are holding on. I think it's a gamble right now with a pre-market price at $28. But if we do scroll down to see contracts that don't expire today, this one that expires 2 months from now, effectively for the March expiration, that's a $50 call. Does look like a good amount of those were sold. But yeah, generally, I'm just intrigued by Celsius. And then another ticker that I did want to go over is Rivian. This one also had some data that was pretty interesting. And also, I think that there was some news on Rivian that, let's see, you can see it behind me. Rivian shares surge over 4% in Friday pre-market following a $6.6 billion Department of Energy loan agreement. So that's pretty good. But let's maybe just learn a little bit more about that loan agreement. So over 4% so experienced 4.02 increase in pre-market trading on Friday. This comes after the company finalized a significant loan agreement with the U.S. Department of Energy on Thursday. And so, let's learn about that loan. The Department of Energy Loan Programs Office has committed up to $6.6 billion in financing to Rivian, and this funding will support the construction of a new manufacturing facility in Georgia, which is expected to create 7.5 thousand jobs. Construction is slated to start in 2026, so a year from now, with vehicle production anticipated by 2028. So if you're in the construction business, that could be really good, for, jobs, planning, whatnot over the course of the next couple of years. And then if you're in manufacturing, that could be great opportunities in Georgia. And also, that's just good for the expansion of the company of Rivian. But let's close that and let's look over at some of the unusual whales data. And so, I'm just going to type in Rivian here, doing kind of the same thing that I was doing with Celsius and Intel. And so again, premium here is 0 because trading for the day has not started. And if we do sort by open interest, with the most contracts traded yesterday, does look like, kind of a mixed bag, calls and puts. And so, but the majority of these that have been picked up are calls, with the exception of these two puts, like the top 10 are all calls. 8 out of the top 10 are calls. So I think it looks good. But if we do sort this by, decrease by the lowest number of contracts, it actually does look like a lot of calls were sold yesterday. And so if I do, let's see, look over at, this is, one that I hold, but I really just wanted to look at the chart here. This is like the same type of thing that I was showing with Intel. If I just scroll up so we can see that behind me, we do have this big drop in net put premium coming down by 1.8 million, whereas net call premium went up by almost 900,000, so lower than a million. But we do see kind of like this shift from the volume being red here, so that those premiums coming down. So this seems to me like it was dip buying territory, and this is, a rally territory, especially for those calls. So this seems like, cheap to buy calls here, and now those calls are rallying. So I think that could be suggesting that the Rivian price will be going higher. So excited about that. And then also, I did want to go over a little bit of news on AMC. I will be doing DD later this afternoon, or after close, I should say. And I will go over the chart. We'll go over this new information. But we have seen what looks like it could be a bottom hit on the 15th of $3.21. And, I have been preparing myself for the possibility of price coming down to $3 a share, but I was also noting that I don't know if it's going to get exactly to $3 a share. So I have this level marked here at $3.50. We are now seeing a rally, and I had posted on X that what would be nice to see is following this big red candle, I was expecting 7 red candles coming down to around $3. What we saw, though, on Wednesday was perhaps the start of a reversal. I was hoping for a close above, Tuesday's close, which was at, Tuesday's high, which was at $3.56. We didn't see that on Wednesday. We did wick up to that level, but we closed below, putting in this inside bar, closing at $3.51, but we did close above that red candle's high yesterday, closing at a price of $3.58. So that looks good, although it does look like it's a spinning top, so we could be seeing a rejection and a pullback. And another thing, this purple downtrend, that is now going to be resistance. So while it is good that we are getting a bounce, we now have this level that we have to be contending with, and I'm not sure what I drew there, so I'm just gonna draw that like that. And yeah, so I think that we may not be in the clear, but the news that I wanted to go over is, why did we put in a bottom yesterday at $3.21? A lot of volume, and this was actually pointed out to me on X, so shout out to the person who did share that with me. But I'm just going to pull up this 8K filing here. Not going to go over it in detail here, but I did just want to highlight what this does go over. I believe that's going to be in the text here. So let's see. As previously disclosed, and maybe I can zoom in so we can see this a little bit better. Okay, so as previously disclosed, on December 6th, I was not happy with this. The company entered into a sales and registration agreement with, among others, Goldman Sachs from time to time, blah, 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 blah. And this was to be, let's see, issuing 50 million shares that would then be, used to raise capital. And then so as of 2 days ago, January 15th, when we put in that bottom, all 50 million shares subject to the sales and registration agreement have been sold in such at the market offerings. So I think that is good that that's behind us. However, it kind of pisses me off because, we're potentially rallying up here. That's when we got the news and we bled from, let's say just the close down to the lows, bled almost 40%. And so I just think that AMC could have been raising capital at a much higher share price than, sub $4. But, it is what it is. I imagine that they sold some here as we were bleeding down here, maybe took a little bit of a pause and then sold more here. So that's behind us. So we are now free to rally. But like I said, could be bumping into resistance here. And we still might be hitting $3 a share. So good to keep that in mind. And then I also wanted to go over in the last 10 minutes, Wolf, going over this very briefly. I'm sure you guys have heard about this. But basically, as you can see, it's kind of like this downtrend. This is just from a Fibonacci, so that's not an actual downtrend. But what we can see, let's see, how can I draw this trend line here? We have this nice little trend line. So this goes back to the highs from, over a year ago. This is December 26th of 2023. We could actually extend that perhaps further back more. But what it looks like is we might be breaking out. So I was actually very curious to maybe be considering some calls on this that would be expiring a year from now. I think that price could be going up to, let's see, what's the high over here? That's around $50. So yeah, if we look at the options chain, we can see, or the options table here, we can see the expirations. If I look at January 16th of 2026, so a year from now, we could see that like the $50 strike, $30 really to buy would be about $50. These are calls. So, that one seems kind of, intriguing to me, but perhaps, that's a high from 2023, the end of 2023, so over a year ago. So yeah, a year from now, it could be getting up to there, but, perhaps more realistically, $20 a share, as we do have this consolidation, that might be some resistance. So thinking about, the $20 strike, that would be around $136 to get one of those contracts. So yeah, I think that this is an interesting one. I haven't looked at the unusual whales data yet. But with that being said, saw this big up move, but it does look like, could be getting rejected with a spinning top, big wick to the upside and downside yesterday on Thursday, January 16th. So maybe get some consolidation before a breakout. So I don't think it's, now, a few days ago would have been really the good time to be picking up shares or contracts. But after this move, you don't want to be chasing it when it's at resistance. Wait to see, does it consolidate here from a bull flag before breaking out, or maybe it pulls back, fills this gap, which would actually be coming down to the low here because, the gaps are based on the closing prices. And so the closing price on the 14th was $4.82. So there is a gap there that has not yet been filled. So I'm just going to mark that by the blue line at 482. Maybe we pull back to that, but maybe we could also be leaving that gap behind. So something to consider. And so I will go over TLT really quick. This is one that, I drew some, kind of wonky stuff over here. And, but generally you can just see that there's this, who cares about this downtrend? I don't think it's really that significant. What is probably a better way to consider this is maybe with a Fibonacci retracement. And I think there are two different ways that we can do this. So I'm just going to go up to the Fibonacci retracement tool, going from the low of $78.40 and then going up to this high here of $100.23. And so from that, let's just see, what are some levels that it might be coming down to. And let's say the 50%. I think at the 50% level, we're actually below that. So let's consider the 618. Also below that, below the golden pocket, but maybe, right around there. We did, find some support around there over here. So maybe we are doing that again. But it could, possibility go lower to 83. But I feel like it's more likely to have found support here at the golden pocket. And so another thing that I can do, which might actually correspond with that 786, is because, we saw this move up and pull back, maybe I adjust this retracement to the low here. So we just have a move up and pull back here. And actually, I don't think it's going to be the 786. I think it's going to be, a 100% retracement. So I am just going to actually lock this into place. And, I will, let's see, just do another retracement over here from that low of 78.40. And so I really just wanted to include the golden pocket on that one. So we can see that has acted as support. And I'll make that a little bit thicker. And I'll make it yellow. And then this one here, we actually don't, we've broken below all of those levels. And so I would view this as, being most useful just with the 100% retracement. So, a full retracement to that level. If I draw that here, I'm actually going to make this one yellow just because I find yellow to be a little too intense, whereas light blue I find to be a very soothing level to be looking at. And so, I most definitely think that TLT could be at a bottom, and I think that it could be pulling up to the highs here. And so let's see if I do, so what we can do is, I guess I didn't draw that retracement over here exactly because it was on the weekly, but what we can do is do an extension going from the top here to the low over here and up to this 100%, which would be, the same distance from here to here, going from here to here would be at 83, which I believe was also the 786 from that bigger picture Fibonacci retracement. Maybe we do go to there, but maybe not. And I do think that we have more likely put in a bottom. And so with that being said, we could do a retracement from here to here and then down to the low of 84.89. Just want to make sure that is correct here with that third point. And so with that, the same kind of distance from here, I think a pretty reasonable target for the TLT would be around $90.60. And so just to show you, how that is like a measured move, going from the low here to the high here, we can just move that over to where that level is, that low. I guess I'm drawing it a little bit incorrect, but that is the same distance up to that 100% there. So that's how you would get that. But I do think that we could be going to 1618 extension. That would be getting to around 94, corresponding with the top over here. So plenty of upside. And one thing, if I bring that box back, that represents a 7% move to the upside. From the low, from current price though, that represents about a 4% move to the upside. So, it's not double digits percentage move, but it is pretty notable. So something good to consider, this could be a nice way to be playing the market as well. And actually, maybe the TLT would be a good one to be adding to kind of like the default list for these pre-market prep videos. But yeah, I did want to just go over a couple things that I plan to do starting in about 3 minutes. Some other channels that I like to watch. I'm just going to refresh this page. And so here, this is going to be Gareth Soloway's, the game plan. So I'm just going to copy this link, and I'm going to put it in the description of our video. So the game plan with Gareth Soloway. Don't need all of this stuff following that question mark. And so there is that. And then also Bitcoin with Scott Melker. Let's see. This guy, I forget his name or his affiliation, but let's see. I'm going to copy that link and post that here, because both of these I plan to watch. I'm going to watch Gareth's game plan right after I get off this stream. I'll probably watch the interview with Scott Melker at some point this morning, but I'm really actually excited about this interview with James Lavish by Anthony Pompliano. James Lavish is, I believe, the co-founder of the Bitcoin Opportunity Fund, just a really smart guy. And I see him actually every Monday speaking with Scott Melker for the Macro Monday podcast that he does. Lots of really good information there. And then let's see, I would like to include a link to Richard Newton's video. He usually does one before the market opens, but he doesn't have it up yet. If you're interested in GameStop, he's a great person to follow, so I'll just include a link to his channel there. And then I will also include that I did go over Wolf. I'll include timestamps to this later on, as well as the TLT. So there is that. And let's see, I'm just going to try to check on the chat real quick. Maybe I can go over one of those tickers that Yuri K was requesting. And so just the note, King Gerald was saying the most call options ever recorded for TLT. Yeah, I did mention that. So, and then Yuri was requesting Aquestive, FIO, and TMDX. But I'll just try to go over, let's see, Aquestive real quick, as I just have a minute left. This is one that I had previously covered. Wasn't a very popular video, and it just really took a long time for the move to play out. But yeah, I was doing videos over here, and yeah, it really took off. I was too impatient. I think I took profits right around here, as it always goes. But let's see. We perhaps have some higher lows. Just going to draw a rough trend line, and then I can revisit this, on Sunday. But yeah, I think that this looks really good. I think that it is into support, and wow, maybe this is, I think that it's better just drawing it from here. But yeah, maybe that's, actually maybe that's a 786. Lots of clutter here on the chart. So I'm actually just going to, delete these levels. Maybe what's that purple one? Usually purple corresponds with something like a Head and Shoulders or something. But yeah, I'm just going to delete that to clean it up. And then just, really quick, going to do a Fibonacci retracement from the low here to the high here. I've just got the 100% on that. So I've got to, of course, add some levels. And I'm curious to see if the 786, that is exactly where Aquestive is at $3 a share, going up about 3% during the pre-market. So yeah, I mean, I think that's at support, although good to be cautious since it is consolidating following a down move that could be a bear flag, but I think that's looking really good. And with that note, I will add Aquestive to here, and I will save that. And I'm going to close down the stream. Thank you so much for hanging out. I am going to now watch Gareth Soloway's game plan before the market opens. And, I'm really excited for the day. Happy Friday, everybody. Hopefully it goes great for you. I will be putting out an AMC DD video later today. Might be doing one on Intel. But I'd really rather, get people to watch, the timestamps for these streams. Tomorrow, I will be going over the options theses and, of course, Sunday Ticker Request Live, 9 p.m. Eastern. So make sure you tune into that and have a great day trading, guys, and have a wonderful weekend. Thank you so much. If you haven't liked already, please make sure you do. And if you're not,